In the next 16 minutes, you will see a question on where to record this list of items. I would suggest you to watch the third episode before watching this for a better understanding. Well, talking about today's content, let's quickly read the question once. Shah Rukh and Salman are partners in a business and they share profits and losses in the ratio of 1:1, which means whether the business makes profit or loss, both of them are going to share it equally. And both Shah Rukh and Salman have invested 1 lakh rupees as their capitals, and we are asked to prepare the necessary accounts using the information given. If you carefully go through the information, and if you have seen the previous episode, then you will probably find that in this question, there are a set of charge expenses which the business must compulsorily pay even if it makes a profit or loss. And also, there are a set of appropriation items which the business needs to pay only if there's a profit. As we already saw in the previous episode, charge items are supposed to be written only in profit and loss account, and all the other appropriation items are supposed to be written in profit and loss appropriation account. Therefore, now let's draw the format of profit and loss account and profit and loss appropriation account. If you see, both these accounts kind of look the same. We have a particulars column and an amount column on both left and right side of these accounts. The only difference is the name of these accounts. Now, let me tell you the logic of whether to write a particular item on the left side or the right side of these accounts. Say if a particular item is a good thing for the business, then you have to put it on the right hand side because your right hand is a positive hand and it has a sort of positive vibe associated with it. And in case if an item is a bad thing for the business, then you have to put it on the left hand side because your left hand is somewhat associated with negativity.
You should not eat with your left hand. In India, we eat with the right hand. Left hand is considered to be unclean.
So keep that in mind. Good things for the business on your right and bad things for the business on your left. Now let's see the information one by one. First of all, capitals of partners will not be written in profit and loss account or profit and loss appropriation account because it is not an income or an expense for the business. It's just an investment. It is the money with which they started the business and they are going to use this money to run the business. That's it. You can't call it an expense or income. So let's ignore it as of now. Moving on to the next item, which is profit of 1 lakh rupees. Usually, profit and loss account starts either with gross profit or gross loss taken from the trading account. Luckily, you won't be asked to prepare trading account in your exams because you already did that in your 11th standard. In 12th exams, no, you will not be asked to prepare trading account. Since gross profit is a good thing for the business, let's write this on the right side of profit and loss account. And when you write something on the right side, you have to put the word by before it. So by gross profit 1 lakh. The next item being interest on Salman's loan 20,000 rupees. And of course, it is compulsory to pay interest on loan whether the business has a profit or loss. Since it's always a charge, it will be written in profit and loss account. But the question is whether it will be on the left side or right side. Well, it's pretty simple. I've already told you that partners are different and business is different. And when a business pays interest on loan to Salman, the business is losing money. And obviously, it is a bad thing for the business. So interest on Salman's loan will be written on the left side of profit and loss account. And when you write something on the left side, you have to put the word to before it. So you got to write to interest on Salman's loan 20,000 rupees. The next item is manager's commission 5,000 rupees. Since it's always a charge, it will be written in profit and loss account. And when a business pays their manager some sort of commission for the work that he does, they lose money and it is a bad thing for the business. So to manager's commission 5,000 rupees will be written on your left. On to the next item, rent payable to Shahrukh, 5,000 rupees. It is always a charge, and when a business pays rent to a partner or any other person, they lose money, and it's of course a bad thing for the business. So to rent payable to Shahrukh, 5,000 rupees will be written on the left side of profit and loss account. That's it. We have written all the charge items. Here we had a gross profit of 1 lakh on the right side, and it is from this 1 lakh we paid interest on loan 20,000, manager's commission 5,000, and Shahrukh's rent 5,000. But keep one thing in mind. In accountancy, whatever account you prepare, you have to follow one condition. Both left and right side total of the account should be the same. Here, the right side total is 1 lakh, but the left side total happens to be just 30,000 rupees, which means you had 1 lakh in your hand and you paid 30,000 from that. So the remaining profit is just 70,000 rupees. And in accountancy, we call this final profit as net profit. The only way to make the left side and right side equal is to write this balance on the left side as 2 net profit 70,000. But wait, net profit is actually a good thing, then why are we writing it on the left side? Because the story is not yet over. You still have to pay appropriation expenses from this net profit. And that's where profit and loss appropriation account enters. Usually, profit and loss appropriation account starts either with net profit or net loss taken from the profit and loss account. Since cash is going out from P&L account into P&L appropriation account, technically it is a bad thing for the P&L account. That's why we are writing the net profit on the left side of P&L account. Finally, the total of both sides has become equal. So now let's start our work on profit and loss appropriation account. Since net profit is a good thing for the business, let's write this on the right side of P&L appropriation account as by net profit 70,000 rupees. And with the help of this net profit, let's pay all the appropriation expenses one by one. To start with, we have interest on partner's capital. You already saw that both Shahrukh and Salman have invested money in the business, and that is called capital. So obviously, the business should pay them interest on capital. And luckily, it is clearly given in the question that Shahrukh has to get 5,000 rupees interest for his capital, and Salman has to get the same 5,000 rupees interest for his capital. Since most of the times interest on capital is an appropriation, it will be written in profit and loss appropriation account. But let me remind you again, sometimes interest on capital can be a charge also. It depends on what the partners decide. Well, in case if it's a charge, then it will be clearly mentioned in the question that interest on capital is a charge. And in that case, you are supposed to write this in P&L account. But now, since it's an appropriation, and when a business pays interest on capital to its partners, it loses money, and it is a bad thing for the business. So on the left side of this account, it will be mentioned as to interest on capital, and under that, Shahrukh's interest on capital 5,000 rupees and Salman's interest on capital 5,000 rupees will be written. The next item being Salman's commission 20,000 rupees. Since most of the times it is an appropriation, it will be written in P&L appropriation account. And when a business pays commission to a partner for the work that he or she does, it loses money, and it is of course a bad thing for the business. So to Salman's commission 20,000 rupees will be written on the left side of this account. Moving on to the next item, Shahrukh's salary 10,000 rupees. Since most of the times it's an appropriation, it will be written in profit and loss appropriation account. And when a business pays salary to a partner for the work that he or she does, it loses money, and it is a bad thing for the business. So, yup, to Shahrukh's salary 10,000 rupees on the left side of this account. The next item, transfer to general reserve 10,000 rupees. Okay, so first let me explain what is a general reserve. Every time when a business makes profit, they have the option to save money so that in case if something bad happens to the business in the future, then they could use this money which was saved in the general reserve for emergency purposes. But keep one thing in mind. In order to save money, first of all, you should have money. That is why most of the times transfer to general reserve is an appropriation. This will be done only if the business has profits. And when a business saves money in general reserve, the money is being temporarily kept aside and you are not supposed to use it without a proper reason. So it is a kind of bad thing for the business, because instead of saving money, they could have reinvested that into the business, but unfortunately that's not possible now. And that's why to transfer to general reserve 10,000 rupees on your left. Next we have drawings of Shah Rukh 50,000 rupees and Salman 50,000 rupees. Yes, when partners withdraw money, cash goes out from the business. It's true, but you need to understand one thing. Drawings by partners is not an expense for the business because partners have taken cash from the business for their temporary use and they will surely return it back soon. So you can't call it an expense. And you can't call it a profit too, because it is the money which the business gave and it is going to receive the same thing back. Nothing more than that. So that's why drawings will never ever come in both profit and loss account and profit and loss appropriation account. Okay, so what are we going to do with it? As of now, let's just ignore it like the way your crush ignores you. Well, I will tell what to do with the drawings in the next episode. Now let's move on to the final item on the list, interest on drawings. Shah Rukh and Salman have withdrawn cash from the business for their personal needs. It's just like a loan taken by them. But instead of taking from a bank, they took that cash from their own business. And for that, the person who withdrew the money is supposed to pay interest to the business. Luckily, it's clearly given in the question that Shah Rukh has to pay 5,000 rupees as interest on drawings to the business and Salman has to pay the same 5,000 rupees as interest on drawings to the business. And when partners pay interest on drawings, a business is making money. So on the right side of this account, it will be mentioned as buy interest on drawings. And under that, Shah Rukh's interest 5,000 rupees and Salman's interest 5,000 rupees will be written. That's it. We have written all the items. Here we had net profit of 70,000 and total interest on drawings of 10,000 on the right side. So the total profit of the business is 80,000 rupees. And it is from this 80,000, the business paid interest on capital 5,000, commission 20,000, salary 10,000 and transferred 10,000 to the general reserve. As we already know in accountancy, whatever account you prepare, both left and right side total should be the same. Here the right side total is 80,000, but the left side total is just 50,000. You had 80,000 in your hand and you paid 50,000 from that. So remaining profit is of course 30,000 rupees. And in accountancy, we call this remaining profit after paying everything as divisible profit. The only way to make the left and right side equal is to write the final divisible profit on the left side. Since no other expense is remaining and because owners are supposed to get the final profits of the business, let's divide the profit to the partners. At the start of this question, we read that Salman and Shah Rukh decided to share the profits and losses in the ratio of 1:1. Since the divisible profit that we have is 30,000 rupees, Shah Rukh's share of profit will be 30,000 into 1/2, which is 15,000 rupees. Just like that, Salman's share of profit will be 30,000 into 1/2, which is also 15,000 rupees. And to understand more on how to calculate and use these ratios, check out episode number 2 here once you finish watching this episode. That's it. We are done with both profit and loss account and profit and loss appropriation account. Wait, what was the purpose of doing all this? we got to know that the business made profit this year and it was pretty much a good year for the business, and partners made money too. So I personally advise both of them to continue their business and not to shut it down. Did you just see that we were able to advise them just by seeing their profits and losses? And that's exactly the purpose of preparing all these accounts, just to get a clarity and take a decision. So that's all for the day. There are sample questions in the description along with the answers. Please do check it out. In the next episode, let's see how to prepare the most important partner's capital account.